First home buyers are being told there's no urgency to enter the market, with house price growth expected to remain stagnant in many parts of the country in coming years. SBS Finance editor Ricardo Goncalves joins me now in the studio. So, Ricardo, where is this growth coming from?
Janice, property forecasters at BIS Economics have run the numbers on Australia's biggest cities and are predicting that Brisbane will see the biggest increase in median prices over the next 3 years, followed by Canberra and Perth. Now, the rest of the country will only see single-digit growth, though, through to 2021, with Sydney only tipped to grow by 3%. It means buyers, especially first-home buyers, now have more time to breathe when it comes to making their biggest financial decision. Erica Todd and her partner started their property search 5 years ago.
When we had a look then, there was literally a line out the door to get in and have a look around, and no time to speak to the agent.
Now, with a growing family, they're keen to secure their first home and have noticed a shift in buyer interest.
And having had a look at a couple of places over the past few weekends, there aren't that many people there.
With a record number of new homes and apartments hitting the market, some areas are in oversupply. There's also been a pullback in investor activity amid tighter lending rules. After reaching a record in July last year, the banking regulator APRA says the value of interest-only loans slumped to the lowest since January 2015.
It means that there's less potential for investors to bid up prices,
putting the brakes on price growth.
In most markets at the moment, if you're a first home buyer, there's not a real lot of urgency to be buying. Prices aren't going to be running ahead of you like they have been, particularly in Sydney and Melbourne in recent years.
The softer prices are encouraging first home buyers back into the market, now accounting for 17.6% of owner-occupier home loans, taking out an average loan size of nearly $343,000. First home buyers saving for a deposit can take advantage of the government's First Home Super Saver scheme.
Any extra money that they put into super, up to an annual limit of $15,000, can then be used to put towards that deposit for their first home purchase.
Receiving the same tax concessions that super offers.
An average wage earner on $80,000 a year that actually uses the scheme over 2 years, they would get about $5,000 tax benefit from this.
It all adds up for first-time buyers ready to take advantage of a slowing market.
That means that we can go in strong and offer what we're prepared to and have a chance.
And we haven't heard of any banks lifting mortgage rates independent of the Reserve Bank recently, but late today the Bank of Queensland warned its variable home loan customers their rates may rise as much as 0.15% from July the 2nd, so perhaps it's a sign of things to come.